Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Chuck Fuller, portfolio manager with Nasdaq Dorsey, Wright, to discuss asset class rankings with international equities continuing to move ahead of U.S. equities. Chuck, it's great to see you as always. Welcome back to Trade Talks.
Yeah, thanks for having me.
It's interesting when we take a look at U.S. equities actually falling to number 4 out of 6 in your asset class rankings, even though stocks had a pretty decent start to 2023.
Yeah, it has been interesting. Usually, when we see that U.S. equities fall kind of below that number 3 spot, it gives us some pause. In this case, I don't think it's a great thing to have happen, but I think a lot of it comes from more strength in other offensive areas of the market. So, for instance, in international equities, like you said, which actually as of Friday night moved up to be our number 1 asset class, which is pretty interesting. First time since 2010 there. So yeah, again, it's one thing to see it fall because it's it's moving down and kind of giving bad relative strength that way versus other asset classes versus kind of lagging other offensive sectors, which is what we're seeing. But on the other front, we're seeing some very interesting moves out of U.S. equities as well, from what we consider like a breadth thrust perspective. And what those are, it's just basically when you have a large number of stocks move up at the same time, that they call that a breadth thrust. And we kind of mentioned one, I think, on the last Trade Talks about how 90% of stocks had moved above their 50-day moving average on the S&P, and that's one example. But just the other day, we had this indicator that we track called the NYSE 80. It basically looks at the percent of advancers on the New York Stock Exchange. That hit a level that's historically bullish. We've only seen it, like 13 other times since 1950 hit these levels. And you average like 25% returns going forward with a really good, hit rate. Basically 12 out of the 13 times were positive.
And also, when you think about style rankings and sector rankings, they've kind of stayed the same, compared to what we've been talking about over the past quarter. Mid-cap value outperforming growth. Energy still remains to be in the number 1 spot, which to me seems a bit interesting. It feels as if there was a little bit of sector rotation to kick off this year.
Yeah. So, energy's still at number 1. We have seen its lead start to slip away a little bit. It's kind of moving down, maybe not in terms of rankings versus other sectors, but just in its absolute value, it's kind of moving down. And we've seen, basic materials move up quite a bit. It was, down fairly low, even just as much as a couple months ago. And now it's the number 2 sector in the space. So yeah, there's been a little bit of rotation. It's going to be interesting to see what ends up happening with energy, if it can, hold out at that number 1 spot, or, whether we'll see it kind of decline in the coming months. We've got a close eye on that for sure.
Yeah. And what about fixed income? Certainly a much different start to 2023 than what we saw in 2022.
Yes. Yeah. It's unbelievable really what it did in 2022. It's already up, about 1% or so, over the last month and up, basically roughly 3% year to date already, which is, we're only halfway through the first month of the year. So it's pretty incredible. And part of that is rates continue to pull back, right, over the short term, at least. If we move below this kind of 3.4% area on the 10-year, that's going to break support on our chart. That's been hit probably 3 other times. So that gives it a little bit more importance if it does break that level. And that opens up the potential for moves down to 3% potentially. And within the fixed income space, we're still seeing, high yield is our number 1 area. We still haven't seen those kind of credit spreads blow out to see those move down. So that's still kind of the place to be. And we've seen, international sovereign debt kind of, be at the number 2 spot along with municipals. So whereas a lot of the, I'd say the more defensive fixed income sectors had been dominating the top for a while in 2022, we're starting to see that, kind of change a little bit. A lot of people are talking about long duration treasuries too, because they're having such an amazing start to the year with rates moving down. But they had such a rough time in 2022. It's probably going to take a little bit of more of a move up to see them move up our rankings.
And finally, let's wrap up commodities here, because this goes back to the concept you were talking about earlier with this breadth thrust. It seems to be happening across all the asset classes.
Yeah, so commodities, they're back up to number 3 in our asset class rankings. They were at number 4. They kind of flip-flopped with domestic equities. And rankings are fairly stable here, over the last month. For all 2022, energy was basically at number one. It really fell out of bed last month. It's actually at number 4 now, out of 4. So it's basically the worst it can be in the subsector rankings. And we've seen precious metals kind of move up, right? And I think we highlighted that last time, and they remain at the number 1 spot. Gold is actually up about 5% year to date already. Silver is also up a little bit year to date. And again, a lot of these energy funds, energy commodities, we've seen, really take a bath. Things like natural gas, I think, is down about 25% year to date. We're only, again, 2 weeks into the year. It's an interesting setup for 2023, that's for sure.
All right. We appreciate the insight as always, Chuck. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.